Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
So let's keep up with our gold analysis. Yes, until recently you can see that ADP report hasn't triggered any strong reaction in any market. So actually across the board, if we'll take a look at the Forex currency pairs, the gold market reaction was very weak despite that numbers were 2 times lower than market expects, and that is a bit, let's say that's a bit curious. So since it is supportive in terms of the sentiment to the markets and stands in agreement with the Wyoming statement, it should support and keep strong the short-term bullish sentiment. At the same time, maybe I just make this suggestion that in recent few months, probably the correlation between the ADP numbers and the payroll numbers have decreased. So previously it was very high correlation. I just remember when I'm building the regression models based on the ADP report retail sales to forecast the payrolls numbers. So it was very high correlation, around 90%. So currently, based on the recent few months, you can see that this correlation has decreased significantly. So very often the ADP report stands positive, payroll stands negative, and vice versa. So maybe because of that moment, of that reason, investors are still stand under pressure of the coming release and do not rely significantly on the ADP numbers. Anyway, our task here is to understand what we could get in the today and tomorrow in the morning before the payrolls release. I still think that very short-term bullish, very short-term momentum stands positive. The sentiment that we have in the market, even based on recent ADP report, should be enough to let market to move slightly higher and to complete the intraday targets that we have. So currently we have few reasons to suggest this. So despite that, on a daily chart we do not see significant upward continuation, but at the same time market stands very tight, right below the resistance. So it doesn't show the strong pullback, it doesn't show the reversal, which means that market mostly stands in preparation to, is building an energy to challenge this resistance. So we have the room to move higher. Yes, we have the fib levels, but at the same time, trading range of the market stands right now lets market to move higher, approximately the 1835 area. And no barriers from the upper body as well. So some spike here might happen to complete some targets that we have. On the following time frame chart, currently, guys, another reason, pure technical reason why I suggest that we still could get the challenge and upward spike here, some upward action. It seems that the bullish dynamic pressure is growing, because take a look at the combination of the MACD and the price action that we have on the gold. So here is the normal relation between them. So market is moving down, MACD is moving down. Here we don't have it. Market stands flat while the trend stands to the downside. It means that Jordan-Napoli dynamic pressure might be building here, and it means the taking out of the previous top. In what way this will happen, we can't say. It might be just occasional spike on the volatility around payrolls release, or it might be a real breakout. Market could keep going higher. Currently difficult to say, but this combination just suggests that this upward action could happen. And if we'll take a look at the hourly chart finally, here's the consolidation that we discussed recently. Yes, reaction on the ADP was really very weak and not very impressive, but still, based on the current price shape, we have it could take the different patterns. So recently we said that we could treat it as some choppy head and shoulders, something of that sort. Currently, we also doesn't exclude that this could be the butterfly, for example. This could be left wing of the butterfly, right? So it's not stating the another wing, and 127 extension stands 1828, 1829 even. So here's the ABCD pattern that we discussed. It's a bit reshaped since recently, since market creates the new top and new bottom, and we have different ABCD. 1827 stands close to the OP. The same with the 3 drive on 5 time frame chart, 1827.60. So currently, it's very probable that we could get some upward bounce here, some upward action. This could complete these targets, maybe before payrolls release, maybe during payrolls release. So might happen. And finally, guys, we'll take a look at the interest rates. What is going on here? This is 10-year yield. You could see that potentially, well, this type of action suggests, at least stands very similar to the price action the market prepares for a downward breakout. Because take a look, market is forming the flag. Usually it's moving from the top to bottom and keep going here. But here is the last effort was stopped in the middle of the range. Means that market wasn't able to complete the swing up and return back to the lower bottom. This usually indicates early sign, classical early sign of the coming downside breakout. So indirectly, it hints on a weaker payrolls release. If this will happen, interest rates could drop below the support area, below the 112 area, and just keep going maybe to the 1 even or even to the 618 supports around 0.9 area. So from that standpoint and from the technical picture that we have on gold market right now, well, we could suggest that at least minor continuation here has good chance to happen. What will happen after that, it's difficult to say, but mostly it will be driven by the payrolls release.